Should I favor Chinese coal stocks over US or Australian coal stocks, or continue equal weight? China's coal usage continues to grow, and the ESG obstacles are minimal, especially when compared to the US and Australia.
Ah, hard to know.
I'd probably keep diversified, for the simple reason that on an international basis, we're going through this geopolitical shakeup. And so there's a number of risks that can take you out of the market. You could be, the best value analyst and pick the best stocks, only to have like what we happened with Russia, right? Where they get sanctioned. So that could happen. It's possible it could happen to Chinese stocks. Now, you might say, well, then don't own Chinese stocks. Well, fair enough. But at the same time, as we know, Chinese stocks don't have all of the DEI. They don't have all the ESG. DEI being diversity, equity, inclusion, and all this kind of nonsense. So there's a lot of hurdles and obstacles that don't exist for those stocks. And by definition, they're likely to outperform as a consequence. So it's not, there's multiple risks. And I think one of the easiest or best ways to actually address those is to be diversified, like to be concentrate on certain sectors, but also to be diversified across the sort of internationally across those sectors.
Very good.
Yeah, I mean, if you own something and then let's say you own some Chinese coal stock and the thing goes absolutely bonkers and becomes expensive relative to Whitehaven or something like that, then by all means you go, well, this one looks kind of, for some reasons, it looks a bit weird and it's no longer cheap. Then you can pull some money out of it. But I think being diversified has enormous merits in this environment.
Okay. Gold reallocation in 6 to 10 years. What are your thoughts on gold 6 to 10 years from now, both direct physical ownership and via mining companies, in terms of violating your 2 to 3% allocation approach and investing up to 20 to 30% of one's total liquidity into gold? Higher inflation and higher rates for longer. Central banks adding gold to their reserves for 8 months in a row, despite prices at historical highs, according to the World Gold Council. 39 tons of gold in January 2024, 16.9 tons in December 2023. Some contrarians sound alarm of the stock market going south for 80%, an 80% correction, and recovering to take tens of years. All this is mentioned as potential drivers of gold prices. That's from Zenster.
Well, our allocation to gold's sort of, allocation to sectors could be sort of, 10%. If you think you're really hot, then you can have, higher exposure. But 2 to 3%, that's sort of, well, we sort of say 1 to 2% for a stock, maybe a bigger cap stock can go to 3%. Gold. Yeah, like it. Like we don't know what your gold versus tankers versus offshore drillers, subsea, oil and gas drilling equipment, coal, uranium, copper, Brazil, fertilizer, chuck in there Greek equities, whatever toxic waste you can think of. One really doesn't know what's going to outperform. It'd be hard to think that gold wouldn't do well, but how well it does, who knows? We don't have. We're not going to sit here and talk bullshit to you folks. I mean, so many people just talk, oh, gold. It's like, yeah, there's also more to life than just gold as well, Now, in terms of some contrarian sounding alarm of the stock market going south by 80% or so, it's like, oh, for goodness sake. I mean,
I'd say broken clocks right twice a day, right?
Well, it is eventually, but you mean like, let's say there is a correction